If you ever thought about investing, you have probably asked yourself, should I put my money into ETF, individual stocks, or in crypto? Everyone has their opinions. Some people swear by ETF for long term growth, others are obsessed with picking individual stocks for long growth, and then you have crypto fans who are convinced it's future of money. Maybe it is, but the problem is if you choose the wrong one for your situation, you could waste years, lose money, or miss out massive opportunities. So in this video, I'm breaking down ETF versus stock versus crypto. What are they, how they work, the pros, the cons, and real example, most importantly, which one is best for you. Let's start with ETF because honestly, they're the easiest entry point for new investors. An ETF is basically a basket of investment that trades like a stock. Instead of buying one company, you are buying into collection of company all at once. Example, the S&P 500 ETF like SPY or VOO. If you buy this ETF, you're basically owning small piece of Apple, Google, Amazon, Microsoft, Tesla, and 495 other companies. Here are some pros of owning ETFs. Number one, built-in diversification. One share gives you exposed to hundred of companies. Number two, lower risk compared to betting on just one individual stock. Number three, super passive. Set it and forget it. Perfect for people who don't want to watch the markets daily. And the last one, the low cost. Many ETFs have expense ratios under 0.1%, which is pretty low, meaning it barely costs you anything to hold them. And some cons of owning ETF. You are following the market average, so won't beat the market unless you take extra risks. But two, no excitement factor. ETF grows slowly, usually around 7 to 10% per year if you track the overall market. Best for beginners, long-term investor, or anyone who values peace of mind. If you want your money to grow while you sleep, ETF are the best for you. Now let's talk about stock, the OG of investing. When you buy a stock, you're buying piece of a company. If the company grows, your money grows. But if the company struggles, so does your portfolio. Example, if you invested 1,000 into Apple stock in 2010, today that would have been around like $20,000. But if you pick the wrong company like Blockbuster back in the day, you would have left with nothing. And here are some pros of owning stock. High potential returns than ETF if you pick the right winners. Dividends companies like Coca-Cola or Johnson and Johnson literally pays you cash just for holding their stock. And the last one, control. You get to choose exactly where your money goes. And some cons of owning stock, high risk. Companies can fail, right? Think about it. Enron, Lehman Brothers, or even recent tech startups that went bankrupt. Number two, volatility. Stock prices can swing daily based on earnings, news, or even tweets. Number three, require research and discipline. You can't just throw money randomly and hope for the best. Who should choose the stock, individual stocks? It's the best for people who want to actively invest, enjoy researching companies, and are okay with taking on risk for bigger potential rewards. Stocks are great for wealth building, but not if you play the long game smart. And now, the wild west of investing, crypto. Instead of owning a company, you're owning digital assets like Bitcoin, Ethereum, or newer altcoins. These are decentralized currencies that aren't controlled by governments or banks. Example, Bitcoin in 2011 was worth around $1. Today, even after drops, it's still worth around $100,000 per share, even a bit more. But here's the flip side. Plenty of coins that looked hot in 2020 are now down 90%, even completely gone. And some pros of owning a crypto. Insane growth potential. We are talking about 100x, 1000x return in some cases. You can trade 24 hours and every day a week. You can buy, sell anytime, anytime you want. Number three, the technology behind it, blockchain, is changing industries from finance to gaming. And here are some cons of owning crypto. Extreme volatility. Your portfolio could be up 50% one week and down 60 to 80% next week. You can't predict it. No guarantees. Projects can literally disappear overnight. And here you can find, and on the market, most of the coins are scams. So you could lose your money, and most chance that you're gonna lose your money. Regular uncertainty. Governments are still figuring out how to handle it. Best for basically the takers, people who understand technology, and anyone who can afford to potentially lose the money they put in. Crypto should never be your whole portfolio. Think of it like a hot sauce. A little can add flavor, but too much can burn everything down. Now let's do some comparisons. ETF is basically means safety, stability, and slow but steady growth. Great for retirement and long-term wealth. Stock is bit higher risk but higher reward also. Great if you want to control, enjoy research, and can handle ups and downs. Crypto is a wild card, massive upside but massive risk. Best for small portion of your portfolio. Personally, I won't keep my portfolio more than 5% associated with crypto. And the smarter investor usually use the mix of ETFs as the foundation, stocks for growth, and crypto for optional high risk, high reward plays. Here's the big question: ETF, stocks, or crypto? Which one fits your best? Are you more about safety and slow growth, or do you love the challenge of researching companies, or do you want to take the chance of the future of money? Drop your answer in the comments. I want to hear your strategy. And if this breakdown helped, make sure hit the smash like button, subscribe for more finance and investing videos, and I'll catch you in the next one.